Welcome everybody, Doug McKay on the 6th of January 2012. We are starting out with a weekly chart of the S&P 500, and we can adjust this trend line a little bit, but you'll see when we put it on a daily chart it pretty much fits right under support. Pretty lackluster day, basically finishing in the middle of the range, but a decent week for the S&P as we got above that 1267 level, back above the 200-day moving average. Obviously, we can make these charts look favorable to the upside or the downside, but the bottom line is we are above the 30, the 50, the 20, the 200-day, and the 400-day moving averages. We again are above the downward sloping trend line on a weekly and a daily. And it certainly looks like 1300 is in the cards. But in the event that that doesn't happen, we always want to have an escape plan. When we go back over to a daily chart, this is the same trend line that you just saw on the weekly. So we're kind of watching that 1250 level. That would be where the downward sloping trend line meets the upward sloping trend line, the lower end of the channel. It would also be right around the 50-day moving average. So we're going to keep an eye on 1250 on the S&P cash, right around 125, 124 on the SPY. Long term, again, if things got below 1200, then I think we're looking at a test of the 1150 level. If that didn't hold, then I think for sure bear market. But as it stands right now, everything is working. The dollar is working, as are treasuries, as are equities. This is a chart of the UUP, kind of a little cup and handle here. Nice once we got above 2250, which is very close to the high over here. Now there are downside gaps here that could be filled, but provided we hold 22, we're in pretty good shape. This is a look at now at a weekly chart of the dollar. Again, you can see once we got above the high that was put in the week of 1216 on a close, that high that week was 2270. The close today was 2272, so that's very bullish. Again, we'll be watching 2220, 22 on the UUP. When we take a look at treasuries, this is the same chart we put up last week. We exited this trade because we wanted to make sure that it would hold the 30 and the 50-day. It did break the 30-day moving average. It is back above it today when we look at a daily chart. It is still holding the 50-day moving average. It held the trend line both on Wednesday, Thursday, and Friday. So if you were looking for more confirmation here, we would want to make sure that we got above this double top. But at the same time, if you took a shot at it now, I would have my stop at 104.40, which is the 50-day moving average, and basically the lows that we put in on Wednesday. All right. So that's treasuries. That's a dollar. NASDAQ, best performer this week. I think it was up 2.7%. This was kind of our non-participating position last week in terms of the uptrend. And that was because the Qs, along with the NASDAQ, were below the 50-day moving average and the downward sloping trend line. We were above that, so we covered our PSQ position on being stopped out on the first day of trading this week, Tuesday. But overall, that looks good. In some of the bigger accounts, we still have our position in Apple. I'm not quite sure if this has put in a all-time high on a close. 419 looks like it has. The all-time high on a print was 426. It looks like intraday. But again, this is a good-looking chart. I'm not sure I would add to it here. Maybe I'd wait for it to pull in a little bit. Let's take a look at Qualcomm. Another decent-looking chart. This is a daily chart of Qualcomm. You know, we kind of have this little saucer or cup and handle here. We got above this level, essentially of 55.50. Closed today at 56.16. Along with the NASDAQ, Qualcomm was up. Certainly declining volume, but the chart looks decent, not too far extended above the 50-day moving average. Possibly looking to test some of these old highs here, 57 plus. Again, we'd want to see 54 hold, maybe even a little bit above 54 on the 50-day moving average. Let's take a look at Cisco. We are in this in some of the selected managed accounts. More confirmation would be a close above 19 like we said on the post on 12/27. But overall the chart looks decent. We kind of have this rising trend line here underneath. Ideally we'd like to see these two meet and then break out above resistance of 19. We would be very cautious if we broke through, let's say 1830, 1820. We would be gone if we broke through 18 on that. The VTI looks very similar to the SPY. Again, above the 30, the 200, the 400, the 20-day moving average, coming out of a base, not too far extended. But like anything else, you guys, if anything breaks down, we have to exit because we never know when that will be the beginning of a sustained trend down. But as we have it now, the overall trend in the equity markets as of the close on the 6th of January 2012 is long. This will be the third Friday, third Saturday in a row we had the overall trend is long. Earnings start off next week with Alcoa, and that may take a little bit of a hit to the market, but we'll see. We got to trade the tape, forget the news, forget the noise. We'll go with the tape. The overall trend is long. Ideally, if we could get through 1305, that would increase the odds that we go to 1330. If it all blows apart here, we get through 1250, we'll be watching 1238 on the S&P. That's it, you guys. Thanks. We'll see you next week. Doug McKay, antiwallstreetguy.com.